welcome back to the channel. Today, we're diving into the top 10 cost accounting mistakes you need to avoid in 2024. Whether you're a seasoned accountant or just starting out, these tips will help you stay on track and avoid costly errors. Let's get right into it. The first mistake on our list is inaccurate cost allocation. Imagine this. You're trying to figure out the cost of producing your awesome new product. You've got raw materials, labor, and a bunch of other expenses. But if you're not careful about allocating these costs correctly to each product, you're going to end up with a skewed view of your profitability. Think of it like splitting rent with roommates, but instead of dividing it equally, you randomly assign costs based on who uses the kitchen the most. Doesn't make sense, right? Same goes for your business. If you're not accurately assigning costs to the right products or services, you might think you're making a killing on something that's actually costing you money. Remember, accurate cost allocation is like having a clear GPS for your business. Next up, we've got ignoring overhead costs. Overhead costs are those sneaky expenses that aren't directly tied to producing a specific product or service, but are essential to running your business. Think rent, utilities, office supplies, that kind of stuff. Ignoring overhead is like forgetting to factor in your monthly subscriptions when budgeting. By not factoring in overhead, you're essentially underestimating the true cost of running your business. And that, my friends, is a recipe for disaster. Here's the thing about cost data. It's not a set it and forget it kind of deal. If you're relying on outdated cost data, you're essentially driving with a blindfold on. Regularly updating your cost data is crucial for getting an accurate picture of your current profitability. Let's talk about variable costs. These are costs that change based on your production volume. The more you produce, the higher your variable costs and vice versa. Some business owners make the mistake of assuming all their costs are fixed. But if you're not accurately tracking your variable costs, you could be in for a rude awakening when your production ramps up and your expenses skyrocket. Ignoring these fluctuations can throw off your entire budget and make it tough to price your products effectively. Inventory management. It might not sound like the most exciting topic, but trust me, it's crucial for your bottom line. Failing to track your inventory cost is a surefire way to create a financial mess for yourself. Imagine this. You're a retailer selling trendy sneakers. You've got boxes piled up in your stockroom, but you're not really sure what you have, how much it cost you, or how quickly it's selling. You might end up with dead stock that's just taking up space and costing you money. Tracking your inventory costs allows you to make smart decisions about ordering, pricing, and even marketing. Cost misclassification might sound like accounting jargon, but it's a mistake that can have serious consequences for your business. In a nutshell, it means categorizing your expenses incorrectly. For example, let's say you're a freelance graphic designer and you buy a new laptop. You could classify this expense as a business expense, which is correct, or you could mistakenly classify it as a cost of goods sold. Misclassifying costs can distort your financial statements, making it seem like you're making more or less profit than you actually are. Taking the time to properly classify your costs is essential for staying compliant and making sound financial decisions. Let's face it, using spreadsheets to manage your cost accounting is like trying to build a skyscraper with toothpicks. It's time-consuming, inefficient, and prone to errors. Spreadsheets are familiar, but in today's tech-savvy world, there's no excuse for not leveraging the power of cost accounting software. These software programs can automate tedious tasks, improve accuracy, and give you real-time insights into your business's financial health. Wouldn't you rather spend your time analyzing data and making strategic decisions instead of manually entering numbers into cells? Cost accounting software can handle all the heavy lifting, freeing you up to focus on what really matters, growing your business. Opportunity cost is a concept that often gets overlooked in cost accounting, but it's crucial for making smart business decisions. In simple terms, opportunity cost is the potential profit you miss out on when you choose one option over another. For example, let's say you're a small business owner and you're considering investing in new equipment. The opportunity cost of this decision would be the potential profit you could have earned by investing that money elsewhere, like in marketing or product development. Remember, every business decision comes with trade-offs. I've seen it happen time and time again. Businesses get so caught up in trying to create the most complex, sophisticated cost accounting system that they end up creating a monster they can't control. Here's the truth. Cost accounting doesn't need to be overly complicated. Start by identifying the key cost drivers in your business and focus on tracking those metrics closely. The goal is to gain actionable insights from your cost accounting data, not to create a system so complex that it requires a PhD to decipher. Keep it simple, focus on what matters, and you'll be well on your way to making informed, profitable decisions. Here's a hard truth: you don't operate in a bubble. External factors like economic downturns, changes in consumer behavior, and even natural disasters can have a massive impact on your costs. Ignoring these external influences is like ignoring a hurricane warning. You're setting yourself up for disaster. Staying informed about industry trends, economic forecasts, and potential risks is crucial for making proactive adjustments to your cost accounting and staying ahead of the curve. In the business world, adaptability is key, and those who can adjust to external factors will be the ones who thrive. There you have it, the top 10 cost accounting mistakes to avoid in 2024. By avoiding these common mistakes, you'll be well on your way to making informed, profitable decisions and building a sustainable business for the long haul. Thanks for watching, and I'll catch you in the next video.